Bring that ass back like a boom, 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 boom.
Hello folks, you're with Boom Traders. This is Supernova and we're doing the weekly review for the first week of March, week number 9 of 2022. And as usual, we are doing our overview in the following sequence. We're starting with the risk vest model. The tactical trading environment comes second. Then we're going to look at the current market conditions, some market internals and charts, and then we are going to wrap it up with a summary. So first things first, we had our sell signal on the 22nd of November last year, and we are still in a negative territory. Market is negative to neutral from time to time, a lot of volatility, and as you can see, we have our general market as negative. The up-down volume, the new highs, new lows, and stock participation is negative as well. There was some change last week. We had put it on up-down volume on neutral, and some stock participation was showing, but this week we just kind of faded again, so we've put everything on negative again until further notice, and I'm going to walk you through the charts a little bit later to see where this up down volume and the new highs, new lows, and stock participation actually comes from. Now, as a tactical trading environment, last week we had it on yellow, like market is highly rotational, but we've put it back on red because breakouts are not working well for the most part. There are some breakouts that are working, but they are few and far in between, and we will talk about it in just a little bit. So this is what we're going to be talking for the current markets. We're going to look at the major indices, the gold, the crypto, oil, and bonds, market internals, and VIX. And in this market internals section, I'm going to show you the charts. They're showing us what the up-down volume, the advanced declines are, and the stock participation. Then we're going to have, again, the top and bottom industry groups. Not much of a change since last week, let me tell you that. Then I want to introduce a new category, which is the sentiment. So you see how traders are reading the market, whether they're bullish, they're bearish. We also have this sentiment for crypto, which is interesting to see. And then again, we're gonna have the summary. So let's take a look at the charts now. So as usual, I want to start with the S&P 500. This is TradeStation, as I've mentioned several times in chat. And the thing that I see, this was the bounce 1 week ago. The thing that I see that actually bothers me is if you connect those lows right here, you will see that this trend line was touched. Well, we started right here, but it was touched once, twice, 3 times last Friday. So the market is really respecting this trend line. You see, we had a bounce. This longer wick to the bottom side suggests we had a bounce, so we had some support right here. Now, it's still early to tell whether we can actually make something out of it, but the problematic is that if you drew the upper channel of this, the upper line of this channel, you are seeing something like a rising channel, which usually resolves itself to the downside. The other thing that's worrisome, of course, is this downward sloping line, which definitely leads to lower prices for the S&P 500. And we've had some questions in chat. Where do we think we're going to find support? Now, without having options data, without having large expirations and sort of complicated data, the most obvious places are places where we had large volume nodes towards the bottom. So as you can see right here, and I'm just going to draw them. Let me remove the snap. I'm just going to draw them on the volume side so you can see where we find some support. Some of those lines are above our current zones. So I'm looking at the volume right now. I'm not even paying attention to the chart, but these are places where we found support. And now if you go and see where the volume is, these are the lows right here. You had a low right here, lows, and I need to turn back on the snap so we get the low exactly. You see what's happening? So these are some support zone. Now the next one, obviously, if we fall through this and if we negate that large recovery bar a week ago, is obviously the 420 421 zone right here. We had this bar, if I zoom in, we had this bar right here touching it. Let me just remove the snap. So we had this bar right here and we had this bar right here. So obviously this is the first place that we are seeing some major support, and you can see the volume nodes rising right here. And then from here on, the next one obviously is the 405 zone. We spoke in the main trading room on Discord about that, so we're looking at 405 to hold. Then unfortunately we have this gap right here, which is an empty space waiting to be filled, which will take us to 4,000, and then we might actually see some support around those zones right here, because this was a support zone that got flipped on this gap open, and now it's support. It was resistance, so this might actually hold as well, which is very close to the 400 zone. So we can consider this a similar area. And then I hope we don't get to talk about how much lower we can go, because you all know the answer to that. We've never seen stocks going to infinity, but plenty of them have gone to zero. QQQ, same story. We're breaking down. This is the last support zone that we see here on the chart, is the last low zone right here, 334 335, and we're pretty close to it. Let me just remove the label to the left side so you can see it. So we're pretty close to this. We almost touched it, went back up, and as you can see, this zone has been touched already 3 times. So we have one right here, we have it right here, we broke close below it, moved back above it with this recovery candle here last week, but the week before that on Thursday, and then we have the last candle right here touching. Now if you break that, we still have the same issue that we have on the SPY as far as the downward trending line, this one. Then you can draw it through different resistance zones right here, but all of them are pointing to that downwards. Even this little break of the downward trending resistance, this little break right here moved up and it moved down very quickly. So selling is intense in the Qs, and the next obvious place of support, again we can do the same exercise, but I think it's pretty obvious for you right now. It's this zone right here, which is about 315, and then we have this zone right here, which is about 300, which is also a century mark. So likely to have some support there. So let's look at the Dow Jones. Dow Jones, we spoke last week about it. This is a head and shoulders formation, and if we remove the snap and just draw a trend line between the neck and the head, it will look something like this. From here we're looking for 100% extension from the neckline to the head to the downside. So you're looking at something like this. So 300 again, century mark for Dow Jones, if this support right here breaks. Again, the formation is pretty much the same. You can see there's like a little shape, it's like dome. We couldn't get any farther than this one right here, so this one was definitely some resistance zone right here. You can see we were able to open above it. As you can see, this little candle right here, it's in the gap zone as well. We were able to open above it right here, but we were quickly rejected. So definitely 340 is a tough spot to be right now. So if we can beat 340, if we can break above it, I'm looking for continuation and hopefully attacking this level of 355. But for now, this 340 seems like a very tall order to match. So let's look at IWM. This is the last one, and we broke this channel to the downside, then we rebounded, as I said, Thursday of the week prior to the week that has already passed. So we moved back, and now you can see the exact same thing happening. So Let's draw some trend lines here. You can see it. This is the channel. We broke it to the downside. We closed below it. So I'm looking for probably continuation and looking to testing this zone right here, 190, 192. If we break below it, we have double bottom right here on the bottom side. As you can see, like these are at the exact same spot. This is 188 holding, and from there, this definitely looks like a break. This is stage 3 break, so definitely looks like a break. We had some rally up, rejected back into the channel, rejected. We went sideways in the middle of the channel, so the channel is from 207 to 34. So if we need to remove the snapping here. So if we draw something right side in the middle, you can see we are playing around the middle, rejected, move to a lower channel between that support zone, and now if this breaks, we are definitely looking for the next support zone, which again, if we do the volume nodes, the next support zone is gonna be, so we have huge volume here, but this is already at the support, so we have some huge volume right here, and we can say this is way above average, and then we're looking at right here. So if we draw these support zones and just add the snapping back, we have right here, probably right here with this huge gap, so 168. Doesn't look very good. There is some support right here, I can see, but still, as you can see right here, so it doesn't really look good. There's some elevated volume right there, but it doesn't look very good for the indices right now. Definitely bearish stance from my point of view, but again, be ready to turn quickly and act accordingly, because with this high volatility, and VIX is an indication of this, with this high volatility, anything can happen. So next session, we're going to look at the gold, crypto, oil, and bonds, and then we'll probably cut this video short to make it a 2 series like last week, where we're going to look at the market internals and VIX, the industry group sentiment, and do a summary in the second video. So let's head on to gold, crypto, oil, and bonds. So looking at the gold chart, and just so you know, this is a monthly chart of the GLD. Looking at the gold, it made this wonderful cup, and then we have the handle. Now I'm looking for a break of this 185.85, so this is like 186 zone right here, and this is the person I personally got into some gold miners. Now silver should follow closely, still not there from these highs right here, but if you look at the weekly, we have very similar situation, and this W that I like to trade is this W break right here. You see we broke the middle, so this is a playable pattern for me. As you can also see, this is the same thing basically that's happening with gold on GLD, not GLS. Gold pretty much exhibit the exact same formation right here, and this is where the break of this W formation, as you can see, like one leg down, one leg up to form a V, and then one leg up, one leg down, one leg up to form the W, and we break the middle where the two V's meet. So we broke the middle, and this is a playable pattern for me. You can also call it double bottom V, whatever you want to call it, but this is playable for me. So gold and silver are in play right now. Now let's look at oil and bonds, and then we head on to crypto. So oil, I usually use either USO, which is and we're looking at the weekly. Let's look at the daily. I usually look at USO, or you can use the Bloomberg ETF UCO, same thing. Gold's been on a tear. Now we are close to reaching all-time highs on oil, so we have to be very careful. Sentiment is very bullish, which also shows that we might be nearing a reversal. I also have some price exhaustion on some of the oil companies that are basically, how to say it, they've invaded our charts for the last 3 to 6 months, and they are here to stay, like highest ranked group. They are pretty much all of them are oil related and energy. So Sentiment is very bullish, but we know that when sentiment is very bullish, that also means that we're nearing the end. So be careful with oil and energy. There's really nothing much to say. This is not actionable unless you want to short it, and but at least if you want to short it, wait for some turning signal or some signal that this might, tap out and start declining. So let's look at the bonds as well. Bonds, the same thing that we mentioned last week. They're forming this rising channel in a descending trend, which is definitely bearish signal. So if bonds go down, stocks will go up. Well, usually that's what happens. Now, what I want you to notice here, we had gap up right here on this candle. We had a gap up above our rising channel, and it was quickly rejected. And this entire candle filled. This was correction. It filled the rising channel, full channel fill. So basically, we're looking for a break to the lower side of this channel in bonds in order to make sure that the stocks have some chance of going up. And now let's look at crypto. Now this is the chart of Bitcoin provided by Binance. Basically, we're looking at the exact same thing. As you can see right here, you have the rising downward support zone. And if we break this, we're looking to test these lows of 34,000. So Bitcoin is definitely looking unhealthy right now, but what I really like about this chart is that we're still not breaking this upward sloping support zone starting from last year in July, and then we had another formation here in January, then we touched it back at the end of February right here. So this is not broken. There's definitely some support right here and huge support right here around the 34,000 zone. So that's still not broken. So Bitcoin, of course, crypto, you probably have heard, was targeted by the European Union and some United States officials, saying that we have to look into crypto as a way for Russia to bypass economic sanctions, which in turn is adding some pressure on crypto as well as the general market, because crypto right now is pretty much acting like the Nasdaq. So it's been weak and it's been moving with it, the technology stocks. Now if we are looking at Ethereum, pretty much the same thing, maybe one idea better, but pretty much the same way. This is a sloping resistance, which for me, especially if we're looking for a turn up, is better than sideways consolidation. But still, we need to break these zones around 3,000 to be talking about some sort of a reversal for now. Again, be careful. We're definitely at support right here, and it's interesting to see how crypto will react, especially with all the news coming the tape, considering Russia, crypto, European and United States sanctions, and so forth. Alright guys, so with crypto, I'm just gonna end this first part of the weekly review, and I'm gonna make a second video that we will discuss the market internals, VIX, top and bottom industry groups, sentiment, including crypto sentiment, and a summary. So see you in a bit.